Hey everyone, this is Chris again, and today's little episode is on lot sizes, and lot sizes meaning how many shares should I buy. The entire idea behind how big your position is how much leverage do you want. So it's saying how much are you willing to risk in order to get a larger reward. Like, for instance, if you trade, say, 50% on margin, you are leveraging yourself. So that means that if the stock goes up a certain amount, you'll be making more than if you didn't buy on margin. Or if the stock goes down a certain amount, you'll be losing more than if you would have just paid with cash. Now, the first thing to do is, when determining your lot size, is determine your own risk. Now, between traders, usually per trade, their risk is 2 to 3%. So 2 to 3% of their entire account. Since I'm guessing that a lot of people that are watching this are going to be small traders with about $6,000 maybe in total account value, we're going to first grab a calculator, do 6,000 times point. I'm guessing since we're also dealing with small traders that we're willing to take a little more risk for some profits because the commissions will eat into our profits. So I'm going to go with we're willing to risk 3% of our trade in every trade. So we're willing to risk $180. Now, as mentioned before, we're going to set our stop order. Here's a stock that I'm simply in love with. It's called AGNC. It's a real estate investment trust, and it has, I know, don't you might need to pinch yourself when I say this. It has a 20% dividend, and it's in an uptrend. So, and it has a PE ratio of I think 6, which means it's bringing in a lot of money. And well, it does have more risk to it, but it's been treating me well when I bought about there. So, we're willing to risk $180. Say we want to buy today. And you got to bear in mind the reason why you see these massive swings. This right here was first day, it went ex dividend. So it went down 5% that day. Next day, it was the company offered 100 million shares, therefore flooding the market again at a lower price, so it went down again. But those two factors barely signify that the uptrend is over, so I'm still in. So let's say you wanted to buy today at 26.85, and that's an alright entry price. It's really not in any pattern right now, but you can tell that it's in an upward trend, and even though it kind of looks a little like a broadening top, it still looks like it's having a strong trend. So 26.85 we'll get in, sure, and this looks like it's going to be our support level at 25.75. Yeah, at 25.75. So we'll set our stop loss just about 2% under that. So we'll do 25.75 times 0.02. So we'll set it about 52 cents below that 25.75 level. So we're setting our stop loss at about 25.23. Now I'm going to put this brown line there. That's our stop level. I'll even write it. Alright, so we have that. This is our resistance line, and this is just another trend line that's showing that the trend's up. So, on that note, we are risking, where's my calculator? we are now risking per trade the difference between our entry price, which I'm just saying is $26.85 for sake of convenience, since I have no idea where it's going to go today. $26.85 minus $25.23. We are risking $1.62 per trade. And that's a fairly low risk trade. So I might even just say I want to risk 2% of my overall capital in this trade, because since it's a low risk trade, I'm going to end up buying a lot of shares if I don't. So I'm going to go back to, actually I'll put a note here, risking 162 per trade. Actually, hold on a sec. Yeah, put that there. Per share. Alright, so we all understand that. And you want to risk 2% in this case per trade. 2% of overall account value. Okay. So we did that, and 2% of 6,000, which we're using for this, is, mathematicians can do it in my head, I'm not going to. 2% is 120. So we're risking 162 per share, and now that's a pretty easy one. We have our risk. This is just a little formula. Risk, which is our previously calculated 162. Risk divided by hold on a sec, hold on. Alright, risk divided by where we're placing our stop order. So, Alright, I'm messing up. It's 120 divided by 162. And that's how many shares our position is going to be. I'm just trying to think of variables to do it. Overall risk divided by distance the stop order is placed equals number of shares to buy / short. Alright, there's our formula. So we get our calculator back, 120 divided by 1.62. With this, we're still taking a fairly big position size, 74.07 times the current price of 26.85. Okay, 74.07. And like I said, since this is a low risk trade, we're not risking much on this, unlike the GPI trade that I did in my triangle video, or the the live person LPSN trade that I did last week, where I set my stop loss below the last support, which was about 20% below. Since this is a low risk trade, we're going to be buying more shares. So by the end of this, we're buying 74 shares, we'll round down, and we'll be spending $19.88 plus commission. Now perhaps on this kind of trade you would say, man, I really don't feel like spending that much money. You can adjust the risk to what you want, like how much of the overall account value you want to trade. You want to risk. So Personally, I don't like spending this much money in a single trade, so I might even just adjust it to I'm willing to risk 1% of my overall account value, which then the amount of the position would only be about 1988 divided by 2. So 994. Risking 1%, 19. Wait. Cost of trade is 994. Because frankly, after doing this, I want to say I'd rather have more stocks in my basket instead of, so I can diversify a little better, but so I'd rather do 1%. But like I said, it's variable. It's just adjusting what you want for for microcap stocks. You'll probably want to risk more because the movements are larger. Your stop loss is set farther away. So 994. And as far as the stock goes here, I'm going to leave this open for anyone who wants to write it down. As far as this stock goes, low risk trades like this in an uptrend are like a diamond in the rough, because think about it, you're barely risking anything, since now 1%, if we're going to risk 1% of 6,000 is 60. So total risk of this trade is $60. Now I'm thinking about it, I'm saying, all right, so I'm going to get 20% a year in a dividend. So I'm already going to get $200 in a dividend, and that is without the price action. So the heck with this. I'm stopping this video and I'm placing an order right now. Alright, guys. Thanks for viewing again. I'll post something soon later. Bye.